please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Good morning. Welcome to Morning Call. I'm Lata Venkatesh and with me Anuj and Sonia. Well, the global markets are not in a very bright spot today. A little bit of profit taking and crude prices slightly higher. But we have long decoupled from these ups, definitely. We know about the downs. We have had our own bit of bad news and therefore we have to check out whether how much of that is priced in. The movement yesterday was interesting. If you picked up the, say, the PSU bank index, which is really the most important index, the epicenter of all the problems that we have had in the past 2 weeks, then actually that index moved up by 1 full percentage point from a minus 3.5%, say around noon, to a closing level of minus 2.5%. Likewise, if you looked at the Nifty bank, the movement was pretty sharp in, say, stocks like Axis Bank, Kotak Bank, I mean the recovery in the last 1 hour. And there you have a movement, pretty significant, a much more significant jump at one point minus 350 points and it ends with minus 105 points. So is this recovery indicating that now there are value buys in the market, or was it a weak recovery? That is the question which probably the market will answer for us today.
Oh, absolutely. Lata, hi, good morning. Anuj, morning. Expiry week has begun on a very jittery note, right? I mean, even if you look at the numbers yesterday, FII sold almost 900 crores in the cash market and now they're net sellers for the year. So the key question is that a February low of 10,276, which we saw on the 6th of February, is that something that could get broken in the very near term? Anuj, morning. Are you getting a sense that we could be headed lower in the near term purely because of how the internals are looking?
Morning, Sonia. As Lata said, I would let the market answer that question because depending on what the market does, you will get a really good trade. Right now it's about the uncle point of bulls. What's the maximum pain that you can take? This is a big question. Did the market make a double bottom yesterday? Because the Feb 6 low was 10,276. Yesterday low was 10,302. My own submission is you don't make double bottoms like that. You make a bottom, then you have a rally, then you retest that bottom. Yeah. It's not, it does not happen in a spate of 2 weeks. So that way, the Bank Nifty is within 200 points of 200-day moving average. Yesterday's low was there. There's a good chance that first defense normally is successful and second defense normally is broken. The FII data in F&O is very bearish. I mean, this kind of bearishness is not playing for 50-100 points. This kind of bearishness is playing for something really big. So, for example, even yesterday index futures, FIs unwound about 5,000 longs, added 8,600 shorts. There was net selling of 1150 crores in index futures. In index options, there was unwinding of 18,000 call longs and addition of 12,000 call shorts. And remember, we are in expiry week. So obviously, the call that's been taken is that the rallies that you have are essentially short covering bounces which will get sold into. So if yesterday's low is held today, again in the last hour there could be some short covering, but don't read too much into that. And if yesterday's low is breached, in that case the selling could get brutal. So as I said, I'll wait for the market's sort of decision on that. There's just one point that I want to make is that this is not a bear market. This is a bull market correction, and bull market corrections make you, hate equities, make you look like, something has gone wrong, or, India is finishing this tomorrow. None of that is happening. And there are a lot of stocks where you saw buying as well yesterday. For example, a V-Guard ended at high point, a Godrej ended at high point, Glenmark, Pidilite, DHFL. So there was some buying as well. And if you're buying stocks at 10,500, 11,000, there's no reason for you to not buy stocks when the market is corrected. Anuj, it's just that right now we're
I wanted to interrupt you earlier mainly to ask you, therefore, will the market, because you said the indications of a double bottom are there, is it likely that the market will be in a range only to break down further?
Could happen. And this has been an ugly series for the bulls. And the bears have all the ammunition right now. So, the last 2 days, even the PSU bank recovery, let me put it that way, that you saw yesterday was essentially a case of, shorts just taking home some money.
It did look like it was a weak recovery.
Because see, at 3 o'clock you decide, okay, I shorted the stock at 140. It's come down to 112, 113.
So why don't I just book my profit?
I'll book my profit. There's no way that tomorrow the stock anyway is opening, you know, at 120, 121. So tomorrow morning I'll take a fresh call. Let me just take my money home. Right now it's that and nothing more. I mean, there might be value which is emerging, price to book value and all that might be emerging, but near term, there is some problem with PSU banks.
You know, we did get a chance to speak to two influential investors yesterday, Mark Mobius and Jonathan Sheasel of Ashburton, and both indicated that in the PSU banking space, they would buy if this dip continues.
Sanjay stuck his neck out and said that he'll buy actually PNB as well. So I mean,
people who have a bird's eye view, I guess, are, you know, looking at it a little bit with
that's what makes the market, Sonia, right? A bull and a bear.
Of course, of course. But let's talk a little bit about what's happening in the PSU banking space.
Actually, that is what is about making me feel, since everyone is saying that when the dip comes, I will buy, is what making me feel that the markets will go even closer, even lower. There is so much of positivity that perhaps the market is going to surprise us on the downside.
But talking about, you know, this entire fraud, the government has now questioned the RBI's fraud prevention framework. So is that something to talk about?
Well, you know, this of course is not a market moving thing immediately, but for the long-term good of the market, you should not treat regulators unfairly, or you should not destabilize what is going good for us. Our regulators are respected worldwide. Now, first of all, I want to say that this probably is a mischievous and wrong reading by the press, by the media. What did the government do yesterday? It wrote a letter asking the Reserve Bank exactly what happened. Now, within this office, people think I know more about banking. Don't people come and ask, you know, where exactly, what is the mechanism and where did the mistake happen? Is it not logical that the government would ask the Reserve Bank, point out to us, since you know this, this part of the economy better than anyone else, tell us where the lapses are. I would think that that's all that the government has done. This is not a buck passing or a blame game that the government has indulged in. It possibly is that people have read it wrongly. But on the other hand, you know, let us turn the situation. Suppose this had happened at, say, a Dhanalakshmi Bank or at a DCB. What would the Reserve Bank have done? It would have superseded the board. This is a major fraud. What was the board doing? What was the management doing? They'll call all the management guys for an inquiry. They can't do this because the sovereign is the owner. This clearly is you're not running it properly. So the Reserve Bank's position also is a little awkward because the owner turns out to be the sovereign. My own sense is, for the government, it is right that it has asked the regulator, tell us where we have to fix the loopholes and tell us how you will fix the loopholes. That's a very good first step to take. But the government has to ask another question. Why is it that such a serious fraud happened? It has to ask itself, does it have the bandwidth to own and run banks? It is time that question is asked. In my book, the most pernicious decision taken in the history of India's political economy since independence is the nationalization of banks. And no government, neither the UPA nor the NDA, has questioned it. Why? Because governments are having fun owning banks. They're able to give them targets which they are not able to achieve with the fisc. You know, you give, this is your farm loan target, 11 lakh crore. This is your MSME target. It's not your money. This is tax-paid money and savings. You should not be doing that. But now, this is a very important existential question. Public sector banks are in a situation where the citizenry is beginning to doubt whether it will be run well. I think you should not waste this crisis. The government has to ask that very serious question. We are not in a position to own and run banks, so let us look at other ways of running banks. Let us subject them to privatization. You know, you can live with a dysfunctional MTNL. You can live with a dysfunctional Air India. They're just floating debris in our political economy space. You can't do that to banks. That is very serious. So I think the time has come to ask the question, and ask it now, not wait for my second term, which probably the government will definitely get. You can't wait for that. It probably has to be done a little earlier.
Okay, well, that is a longer debate for another day. So let's move on and talk about the markets. Let's take a look at what our wise experts have to say as we head into trade this morning. Rhythm Desai of Morgan Stanley says in Q3 FY18, earnings growth weakness was led by public sector banks and PSU oil companies. He says improving revenue and earnings breadth was a key positive. He adds Morgan Stanley coverage revenue growth rose to a three-quarter high at 15% year-on-year and beat Morgan Stanley analyst expectations by 4%. He says the strongest growth came in from energy and materials, and he adds the EBITDA growth at 15% year-on-year was 3% behind Morgan Stanley analyst estimates. and the healthcare sector saw the most decline in the EBITDA growth, combined with margin compression of 430 basis points.
Okay, now for a global call actually, again from Morgan Stanley. Andrew Sheets says the last 3 weeks tell us inflation clearly matters for markets. But strong global growth and a good Q1 reporting season provided an important offset. He remains on watch for tricky handoff in Q2 as core inflation rises and activity indicators moderate. Andrew says real rates matter for most stock bond valuations. While they have risen in the US, they managed to barely hold a 80 basis point range, a 0 to 80 basis point range that existed since the middle of 2013. He says this may help to explain the market resilience, but also supports their view that the S&P 500 will be driven by earnings from here and not multiple expansion.
Okay, let's also get you some money market views for the day now. Bhaskar Panda of HDFC Bank says the dollar index has steadied as US Treasury short-term yields have rallied. However, he says the dollar INR may show a different tendency given cues from overseas markets. He expects the pair to open above 64.50 today and trade in a range of 64.40 to 64.60. He also says the 10-year benchmark bond yield may remain biddish and may move in a range of 7.55 to 7.60 for today.
Okay, let's talk about the global cues then. Here's Nigel with the world view.
Well, US markets were shut in yesterday's trading session owing to President's holiday. But today, all eyes really more than the equity markets. Yes, we'll be watching out to see how those US markets open up. But in fact, the Treasury auctions as well is something that the street is keeping an eye out on. Remember, the $151 billion short-term bills will be auctioned today. That will give you a sense in terms of the yield curve going ahead as well. But overnight, European markets, well, they were weak. We had the CAC, the DAX, as well as the FTSE. They were under some pressure in trade yesterday. The sectors that were under pressure really were household goods. You had the auto sector as well as the healthcare sector that was under some pressure. Well, Reckitt Benckiser, in fact, came out with its set of numbers. The stock was down by around 6.5% in trade yesterday on the back of weak results. You have Daimler as well. That stock as well was under some pressure because there was some faulty software that they were using to test the diesel emission laws. That's in fact what reports suggested. So that as well was under some pressure yesterday. If you're looking some green in terms of the European markets, well, banking stocks gave you that. You had BofA ML, the brokerage, they raised the target price on Deutsche Bank, and that's why in fact that stock did do well. Emerging markets, well, it was a mixed bag. You had the Brazilian index as well as the Russian index. They in fact had a mixed close to trade. Today, quite a few markets are closed. So you have the Chinese market that's closed, the Taiwanese as well as the Vietnam market, but other markets that have opened up from the Asian market screen, they have opened up with some red. So the Nikkei is under pressure. The Kospi as well was under some pressure. And that means that the SGX Nifty will open up lower in today's trade. Back to you.
Okay, Nigel, thanks a lot for that. In fact, let's get a world view now. India has definitely underperformed global peers since the start of the year because of a lot of domestic issues like the big bank fraud, etc. But what are global investors doing? Jonathan Sheasel of Ashburton joins in now. Jonathan, good morning and thank you for taking the time out. What's your view on India now after the recent underperformance that we've seen versus global peers?
I think it's I guess versus other emerging markets, India has been quite frankly underperforming for some time. I think obviously, the China-related factors have been clearly keeping most commodity complexes and the energy prices reasonably buoyant, which has certainly helped some of the other emerging markets that are more geared into those sort of prices. More recently, however, there's no doubt the macro situation on India on a relative basis has certainly taken in the short term a turn for the worse. Obviously, concerns over the budget that we saw, which I guess were neither too hot or neither too cold, I guess, in most people's opinion. And then obviously more recently, this fraud case sort of adds to the worries over the recovery in the crucial PSU space in the banking sector. So with all these factors in place, and then even you can talk about things going on, for example, in an emerging market like South Africa, where you suddenly seem to have some political change as well. And India, which previously was fairly unique amongst many emerging markets where you did see political change and reform, that could be happening elsewhere now. So perhaps the relative attractiveness of India has dimmed somewhat, and people are putting money elsewhere in the short term.
So would that be your call as well, moving money out of India to other EMs? And if that's the case, which markets would you prefer?
No, we're still very much overweight India. I think, we go through these phases from time to time where things do look a little bit bleaker. We're still very optimistic on a medium to longer term view. I think some people out there perhaps would hedge India exposure with another emerging market, which could be, say, Russia, which has more oil-related focus. So, it's the sort of yin and yang approach. But yeah, we're still fairly optimistic about the India story, about where it's going. But there's no doubt in the short term, it's facing a few headwinds.
Jonathan, good morning. You also handle the China-India fund, where you have 52% weight on India. Right now, which market is more attractive?
Yeah, so we have various indicators for allocating between both markets. They've been a little bit choppy more recently. There's no doubt that the China side seems to, it's obviously a bit further advanced from a cyclical perspective than India. And earnings expectations are certainly very optimistic there as well. I think one of the key differences, though, with China vis-a-vis India is the likes of the Tencents, the Alibabas, the Baidus, the big e-commerce plays that you can find widely in China that India just doesn't have. So I think certainly some investors who are focused on those sort of areas would be bypassing India, because there is, quite frankly, no comparison that you can find in India, which you can certainly find in China or even the US, for example. So at the moment, I think most of our models, they did go negative on China recently. They've gone back to being slightly more neutral to optimistic. So I think probably for the time being, we're still quite optimistic on China versus India. So we'll be slightly overweight China versus India currently within that fund.
Okay, that's interesting. So China is looking a bit more optimistic. I want to talk about specific stocks, because you recently entered into PSU banks and invested into SBI in a very big way. We've seen a huge fraud, people talking about the possibility of a credit crisis post what happened with PNB. Would you worry about that?
We relatively recently went into State Bank of India for the first time into a PSU bank since the fund was launched, actually, over 5 years ago. And the view there was, it was basically on the back of the government's recapitalization. We have stated at the time that certainly if you look at management quality and general operating quality and all the ratios of private versus public banks, there is a yawning gulf between the two of them, and that hasn't changed. State Bank is clearly the best of the pack, but it's a pack that obviously, with the news that we've just heard over the last few days, still has a lot of work to do about improving risk systems and pricing risk correctly. So at the moment, we still think it's actually a good time to be looking at financials. I think clearly this sort of news doesn't help in the very short term. But certainly, if banking stocks continue heading south, we'll be looking to probably add to our positions as opposed to selling them.
Do you think there is a high possibility of a big correction in Indian markets in the near term? The market has corrected, what, 8% from the all-time highs?
Yeah, so I think the market was, after the runs we've had, particularly in some of the mid and smaller cap counters, the market was very prone to a pullback. I'm not sure we'd be looking for a big pullback, a sort of 15 to 20%, but certainly, anything 10% or in that sort of region would be within expectations. The market has certainly re-rated, but obviously what we're waiting for still is that earnings recovery, although obviously the last quarter's numbers look pretty good. So I'm not sure a full-on bear market correction is warranted just yet for where we are in the cycle, but certainly a decent correction, I think, would certainly make, from an investing perspective, there's a lot of counters there that look quite pricey, and we've been following them for some time, waiting for opportunities to get in. So You know, we wouldn't worry too much about a correction, but I don't think we'll get a massive one.
Okay, talking about quality names which have corrected, you've liked in the past auto ancillary stocks like Motherson Sumi and Endurance Tech, and they have also corrected a bit. Would you want to buy the dip?
Yeah, so, you know, clearly, you know, Motherson, another, you know, counter which has traditionally over the last, well, fairly long period of time delivered very good returns. Obviously, the numbers were a little bit light, and you can point to various factors for that. We remain optimistic over the medium to longer term with that stock and the quality of management and you know, where this company is going with their product sets. And I think we're still very excited with that. But the stock had run up quite considerably, like a lot of these other stocks as well. So I think that, you know, that's the trouble. There are quite a number of counters in India today which were certainly priced to perfection. And unless the results came through to justify those valuations, they are in the short term, there is some risk of a fairly significant sell-off. I don't think, so Motherson's come off quite a bit in the last few days. I would certainly think, you know, some people will begin to get more attracted to the counter down here. But yeah, I think it's more of a systematic issue with a lot of stocks that have just run up too fast.
You have also expressed your interest in sectors like aviation. Any other interesting stocks or sectors that you've bought into recently?
Yeah, so you know, for us, we're still, you know, we're reasonably keen on a number of stocks and sectors. So from a sector perspective, as I said earlier, I think if we did carry on seeing this sell-off into financials, we'll be looking to add to financials. And I think even, you know, some of the metal stocks have come off over the last few days as well. I think that's another sector which had run very hard, could do with a bit of a sell-off, and that provides good opportunities for going back in. So, you know, one of our recent additions has been Indigo, and that's done reasonably well for us. You know, when you're trying to find structural growth stories in India at a reasonable valuation, it's very, very difficult to find them. And you know, you do get them every now and then, and you tend to find that, you know, it's always a good time to pick these names up into volatility. So that's why, to an extent, we welcome a bit of volatility, because then we can access some of these counters at valuations which you struggle to get hold of. But yeah, our last major addition to the fund was Indigo Airlines.
Okay, well, let me focus. You know, you spoke about metals, but have you taken a good look at the big Tata Steel move to buy Bhushan Steel's assets? Does that make Tata Steel attractive?
Yeah, we looked at Tata Steel some months back. We didn't pull the plug on it. We ended up just buying Hindalco. Obviously, slightly different story there, mainly obviously aluminium and copper focused. We looked at the steel companies in India. We found them quite attractive. The one thing, if I'm honest, that put me off at the time, I guess we started looking at this over a year ago, was the restructuring of the European operations. I mean, clearly, from an Indian perspective, most of the companies are operating at or near full capacity. The economy is certainly gaining a bit of traction from an infrastructure perspective, and yeah, the steel sector looks very attractive. It's obviously, you know, it does seem on the face of it that Tata Steel seems to be willing to pay up to gain those assets. So it's quite aggressive bidding. So I think, and obviously we saw the stocks off quite heavily. I think we'll keep an eye on what happens to the price action over the next few days and maybe take a view.
Okay, this is one question we ask you every time. The stock that's made you most money, Eicher Motors, has corrected 11%. Would you buy the dip or look to rotate into other names?
Yeah, so I think that there is some of that going on. I think that, you know, I guess the question really is, you do have these wonderful structural growth stories out there, and certainly Eicher Motors has fitted into that category, as well as, you know, quite a few other stocks out there, and they tend to trade at a very, you know, premium valuation. I guess investors, if you are getting more confident that this economic recovery will actually broaden out, that will pick up steam, I guess investors therefore have been looking for a bit more cyclicality, and you can pick up the more cyclical stocks for a slightly cheaper valuation. For us, we have been doing that actually. We have been selling out of some of our more structural stories, and shifting into those cyclical names. But I think what we wouldn't be doing is selling out of all of them. So we like to have a balance at the moment. So some of the structural names, in combination with a few stocks that give us that operational leverage or operational gearing to an economic recovery.
Okay, so since you are in a mood to talk about a lot of stocks, what have you sold and what have you bought recently?
Yeah, not that recently, but I guess over the last sort of year to 6 months, we've sold Whirlpool of India. That obviously you could classify as one of the structural sort of stories. And yeah, as I said previously, we've added to the likes of Hindalco and a couple of the other infrastructure plays where valuations were significantly cheaper.
Okay.